Let's get right to the floor show. And Jay Jacobs, BlackRock U.S. head of Equity ETFs. And I bring that up because today might not be a day where the AI names are ruling the roost, because they usually are. But this one ETF that BlackRock has, the BAI, has been a true winner. And it's got some of the biggest names in it, but some of the names that we don't often talk about, including Snowflake, et cetera. So tell me about this one and why you think that it has just engendered so much attention and money.
Sure. Well, BAI is an actively managed ETF, so its portfolio manager, Tony Kim, is really trying to select the companies that he believes are going to be the long-term winners in artificial intelligence. Yes, it's some of the Mag 7 names that we all know and talk about a lot, but there's a longer tail of companies, data owners, large language model developers, semiconductor companies that are not as well known but are absolutely integral to the AI ecosystem. We're holding all of that in this fund for really a one-ticker solution to get exposure to one of the most powerful themes in a generation.
Okay, so it has skyrocketed more than 65% over just the past 6 months. It's had a really beautiful performance here. But given that a handful of mega cap tech stocks have really driven the market gains and all of that, I guess, are the broader market ETFs also something that's a better way to gain opportunity in a portfolio at this point?
Well, I think investors always have to think about diversification. Yes, the Mag 7 has been so helpful for driving returns over the short term, but in different market environments, it could be different drivers. I mean, throughout most of this year, we've seen international do incredibly well and help drive portfolio returns. There's some markets where small caps can be very helpful. Getting targeted on specific themes like AI or infrastructure, which has been really supported during this kind of reshoring effort and changing supply chains, that can help power portfolios as well. So I think the name of the game is stay diversified. Don't be too enamored with the Mag 7. Look for all the opportunities in the market.
How important is it for investors who are watching right now to remain, I guess flexible when it comes to allocating in their portfolios? It gets very exciting when there is such a dynamic sector like AI and it is expanding exponentially. But how important do you stress to everyone that there are other opportunities out there that you really do want to split the baby on?
Well, all the time. You know, we talk about building a diversified portfolio specifically with accessing different themes. So AI is, the preeminent theme today. We're talking a lot about global and United States infrastructure. If you look at kind of all the reshoring efforts to build more things like semiconductors in the United States, you need the roads, the highways, the power to be able to support all of that. That's a very different basket of stocks from artificial intelligence. And we also hear a lot about the debasement trade and people looking at diversifiers like gold and Bitcoin to play a unique role in a portfolio as well.
So Bitcoin has come well off the recent highs of 126,000. Now it's at about 112,000. What is really significant about what BlackRock was able to do with its spot Bitcoin fund is see one of the fastest ramp-ups in assets under management. I mean, again, it is just a spot Bitcoin. It follows the price of Bitcoin, but more than $90 billion in its first year plus. I mean, that's incredible, and yet this is still a volatile asset.
That's right. I mean, what we see from a lot of investors is, one, people were waiting to access Bitcoin through an exchange-traded product. Just the ease of being able to buy exposure to Bitcoin through traditional brokerage account has led a lot of people to buying IBIT, our BlackRock Bitcoin ETF. The second piece of it, though, is in this market environment where you're seeing a lot of concerns around global geopolitics, persistent inflation, rising government debts, people are really interested in the Bitcoin story of something that lives outside of the world of fiat currency. And so there's a lot of it, just like we're seeing a lot of interest in gold, we're seeing a lot of interest in Bitcoin due to macroeconomic factors today. We
have a lot of viewers who set it and forget it. They buy baskets of stocks, the likes of what iShares, BlackRock is very, very well entrenched in. I guess, how at this point in time are you able to argue that at least the passive, not the active ETFs, but the passive equity exposure from these ETFs is a more efficient way when this market is, as we said at the top of the show, buffeted by the winds of what's going on in Washington as well as overseas?
Well, we look at portfolios in three buckets. One, people can start by building a portfolio with what we call be the market, low-cost, tax-efficient ETFs. But increasingly more people are trying to beat the market. That's looking at themes, that's looking at factors, active managers that can provide alpha. And then finally, the third bucket is modify the market. How do you protect with risk management strategies? How do you generate more income with buy right strategies? So our be, beat, modify is really a great way to think about a holistic portfolio construction.
We're at a record high for the Dow Jones Industrials, and the rest of the majors are very close to records as well. How do you view that? what kind of protection do you see clients and customers scooping up in the ETF world? In what form?
We're seeing people buy buffer ETFs. These are ETFs that effectively defend against certain amounts of sell-offs in the markets and give you upside participation up to a cap. We just launched one, S10, which provides protection against the first 10% of a sell-off in the S&P 500 over the next year.
STEN?
STEN, exactly. And it's a really helpful way for investors who maybe have been sitting on the sidelines, watching the S&P 500 or the Dow reach near record highs. There's $7 trillion in money market funds that have been sitting on those sidelines. These are people waiting to get invested but don't want to mistime it. If you can get into a ticker like STEN, have a measure of downside protection but still have upside participation, that can really help people get invested and stay invested.
All right. Well, we are looking at the Dow up 264, S&P up 6, NASDAQ down 16, Russell down about 14 points. So a mixed picture here. Jay, good to see you.
Thank you.